Hi guys, welcome to lesson 2 of the beginner series, Introduction to Forex Trading. Now in the last video we spoke about steps, beginner's guide to starting Forex. Um, we spoke about things like setting a goal, getting a mentor and a support community, getting your trading infrastructure, and so on and so forth. It's very important you go and watch that video to serve as a foundation for you to begin your journey as it relates to trading the financial markets. Today we're going to be talking about what is forex trading, a beginner's guide. Um, one of the things I'll be doing in today's lesson is to tell you guys the truth about forex trading. Now I know that the narrative about forex has been painted in a way that it should not be. So a lot of people have a different or a wrong um, understanding of what forex is all about and what the financial market is all about. Some people see it as a get rich quick scheme. Some people see it as gambling and they gamble with it. Some people see it as a scam, you know. So because of their different encounters, different experience with the forex market, which I know and I believe it is a half-baked encounter. You know, they have labeled forex to be different things. You know, but today I'm here to give you the true representation of what forex is all about. All right. My name is Prince Isaac, and I am a professional forex trader. Let me start by saying many people jump into forex without understanding what they are really doing, without a proper guide, or even the person guiding them properly doesn't really know the metrics and the principles of engaging the forex market. So they dive into trading without knowing what they are really doing. Um, in this video, you will learn what forex trading is all about, how the forex market works, who trades forex, how money is made and how money is lost in the forex market, and you will learn the truth about the risks and the realities. You know, there's this narrative out there also that forex is risky. um I wouldn't say completely that forex is risky. I would say you have made forex risky because you don't have control over yourself. You're not disciplined. You don't have a system. So forex is what forex give to you is what you put into forex. So if you are greedy, you know, if you have fear, you will get the result that comes from greed. You will get the result that comes from fear. So forex is a garbage in, garbage out. Whatever you put into it is what you get out of it. All right. With that being said, it is very important to understand that forex is not gambling, but ignorant people turn it to one. They gamble with it. All right. Now, what is forex? Forex, which is also known as foreign exchange, is the global market where people, banks, and institutions buy and sell currencies with the goal of making profits from changes in currency prices. All right, so you can see that we have a lot of players here. It's a global market. That means the whole world is involved in it. We have individuals and people involving in this. We have banks, we have institutions, right? Think of it as your normal physical market that you go to buy your foodstuff, you go to buy your jewelries, you go to buy different things, all right? Now, this is a market, or your physical market is a location where you go and you exchange money for what you need. So, for example, you want to buy clothes, you have money, you exchange money for the clothes in that market, right? So the same thing with the forex market. The only thing is that you are exchanging in the forex market, you are exchanging a particular currency for another currency, right? um when I explain forex to the layman, I use um I use investments in grains, right? People that invest in grains as an example, because it's a little bit relatable. So let's take for example, it was harvesting season, and um, you bought a grain, let's say maize, for example, or beans, right? And the price of a bag of beans was, let's say, 70,000 naira. So you bought bags now with the goal of storing them until when the price goes up and you sell. People do that for land, also real estate, land banking, and so on. Okay, so you bought, let's say, 10 bags of 10 bags of maize at 70,000 naira. All right, so 70,000 naira times 10, you bought, you invested 700,000 naira in maize. Okay, and after some time, let's say after 3 months, after 4 months, after 5 months, the price of maize in the market changed from 70,000 naira per bag to 100,000 naira per bag. So on each bag you have made a profit of what, of 30,000 naira if you sell at that time. So you bought it when the bag of maize was low, that is at 70,000 naira, and after 3 months it's appreciated to 100,000 naira in the market. If you go to buy a bag of maize in the market, they will tell you it's 100,000 naira, and you said, oh, I have how many bags did we buy? I have 10 bags at home. Since it is, and I bought it at 70,000 naira. Since it is selling at 100,000 naira, I would want to sell because the price is high now and I'll be in profit. So you went home, you brought your bag of maize and you sold it, and you made a profit, or you made 1 million naira. That is a profit of 300,000 naira from an investment of 700,000 naira. So you capitalized on the increment in price over time. Now, this is what we do in the forex market. Currencies increase over time. Every single second, the price of a currency change as against to another. What that means is, when you want to buy dollar with naira, for example, today it is at 1,450, right? Tomorrow you will hear that it is at 1,453, 1,480. The price fluctuates every second. It moves up, it moves down, it moves up, it moves down because of different metrics and different factors. government, war, economy stability, and so on and so forth can make the currency of a nation to fluctuate. So, you as a forex trader, you are using advanced analysis, data, and history to determine whether a currency or a country's currency would be strong or weak. Now, when a country's currency is strong, it goes up. That's it increases in value. But when it is weak, it depreciates. Right? So you have data that you analyze and you then predict based on this historic data. My country's currency or this country's currency have the tendency of becoming stronger or going up in the next 2 days. So what do? You buy. Wait for the next 2 days to see if your prediction is correct. It goes up, it increases in value, then you sell. So you buy low, you sell high. Let me not go too deep. All right. I hope you understand that explanation. So Forex is the largest financial market in the world. Now there are a whole lot of there are different financial markets. We have crypto as a financial market, which consists of digital currencies, Bitcoin, Ethereum, and the rest. We have stocks. Also, the stock market is a financial market where you trade companies. Okay, you invest in the performance and the growth of a company, you make money. Okay. What other financial markets we have? Now, amongst all these financial markets we have, Forex is the biggest. Right? Take it for example in a state like let's say Lagos or Abuja, you have different markets where you go to buy particularly different things. Okay, you have Alaba market, you have Computer Village in Lagos. In Abuja, you have markets like Maraba market, you have Wuse market, you have Utako market. So these are different markets, and most of the times you will see that these markets, some of them have compartments where if you are looking for fabric, there's a segment that has been dedicated for fabric sellers. You are looking for foodstuff, there's a segment that has been dedicated for. So that is how in the world we have different financial markets, right? Different markets dedicated for different purposes: crypto, stocks, forex. Now, among these markets, forex is the biggest of it all, with a volume of 1.5 trillion dollars per day. That means every day 1.5 trillion dollars is circulating in the forex market. That is massive, very, very massive, right? In a day. So you as for a forex trader, you're only just trying to take your own little share from this volume of money that is circulating. All right. Now, trading Forex is about trading currency against another. For example, USD NGN, that's the US dollar against the Nigerian Naira, Euro USD. Alright? So you are trading the price differences, or you are capitalizing on the difference in price to make money, as I've explained. Alright, so you are buying one currency and selling another at the same time. So you have Naira, you're using Naira, you're selling Naira and using it to buy dollar. Alright, and then you wait for the price to change, either to increase or to reduce, and then you exchange it again. Okay, so that is just the basics of the forex market. And the beautiful thing about the forex market is that we make money when you make money when you buy, you make money when you sell. So you make money in two ways. You can make money when you're buying, you can make money when you're selling. Moving forward, how the forex market works. Now, forex is a global market, which I have said earlier. That means we have big single aspect of a country involved in the forex market. So countries, nations have been involved in the forex market because we are dealing with the currencies of these nations. So you are rest assured that as long as these nations exist, forex exists. That means forex can never be a scam. Okay, it can never be a Ponzi. As long as people spend US dollar, as long as you spend your country's local currency, the forex market exists. As long as there is importation, there is exportation. As long as the economy of these nations, you know, remains, the forex market exists. The opportunities in the forex market exist. Okay, forex have been existing for thousands of years, and it is still going to be existing. All right, now it runs 24 hours, 5 days a week. So Monday, Tuesday, Wednesday, Thursday, Friday, 24 hours, no sleeping, because when you are sleeping in your country, some people are awake. So it runs 24 hours a day and 5 days a week, excluding weekend, because banks are closed during weekends. Okay, and banks are major players in the forex market. Um, Forex is a decentralized platform. It is decentralized, meaning there is no single exchange. There is nobody, no entity controlling Forex. Okay, because we have different governments and nations involved, so it is decentralized. Okay, and what that means is it cannot be manipulated by a particular country or a particular individual. No. For those of you that are already into forex, there are forms of manipulation in the market. But when I mean manipulated, I mean it cannot be changed. It is what it is. I hope that makes sense. Now, trade happens electro- uh, electronically via brokers. So what that means is you don't need to go to another country to engage in the forex market. It's electronically, so you can be in the space of your room, and you are doing business with nations. Okay, so the market doesn't sleeps, only traders do. Now, who trades the forex market? We have central banks, we have commercial markets, we have institutions and hedge funds, we have corporations who use it for importations and exportations. We have retail traders. Okay, so what is the role of these people that engage in the forex market? First and foremost, central bank of countries. Like in Nigeria, we have it as the Central Bank of Nigeria. In the US, you have it as the Federal Reserve. Okay. Um, the best way I will explain this to you is that central banks are like referees in a football match. They don't play the game, but they control it. Okay. So central banks control their currency in the forex market. All right, they control their country's currency. They set interest rates. They step into the markets to stabilize or strengthen their currency. So I give you this example. There was a time when Nigerian currency was performing very badly. You know, it was almost going to 2,000 naira to a dollar. All right, so for you to get $1, you need um 2,000 Nigerian naira to get $1. So it was becoming too high. All right. Um, but the Nigerian government step into the Nigerian government stepped into the foreign exchange market, pumped in money to stabilize. That's the central bank, to stabilize the Nigerian's currency in the foreign exchange. So prices began to go down. It went down to almost 1,000 naira to a dollar, but they couldn't maintain it, and it is back up again. So commercial banks are also players in the forex market, right? Um, they are big players because they control large amount of money. Okay, so they are usually used to move large amount of money. Okay, in the market, they move money for governments, they move money for companies, they move money for rich, high network individuals, and so on and so forth. And they trade high volume. So when you give banks your money, one of the things they do with it is to trade it. So they have high volume in the market. Okay, so they are big time participators, or they are big time engagers of the market. Now, institutions and hedge funds also are big players also in the market. Um, Institutions, investment firms, and hedge funds, they are big players also because they have volume also in the market, and they trade the market to make profits of their money. So they control large amounts of money. Okay, now corporations who engage in importations and exportations also are players in the markets. Operations like oil companies, tech companies, importers, and so on and so forth. Right. So some of them use forex to trade and to do business. They exchange currencies to pay for goods and services, possibly when they are buying goods and services for their business. And they use forex to protect themselves against currency fluctuation. So some of them make money in their local currency and then they turn it to a more stable economy just to stay afloat. Okay. Um, so if a Nigerian company buys goods from China, they must exchange the naira to that currency of that country, that's yen of China, to be able to, do business in China. So that's also a form of forex. All right. Now we have retail traders, which are people like you and I, right? Retail traders, people like you and I. They are small individuals, um, traders that just want to capitalize on price increments to make money. We don't have the ability to control the market, we don't have the ability to move the market. We only follow the market, predict what the market will do, and then follow it. Okay? And we have access to the market through brokers. We would be explaining what a broker is with time. Okay? But just take it as a broker is like your bank when it comes to trading the forex markets. So moving forward, how do people make money in the forex market? Now, people make money in the forex market when they buy low and sell high, or they sell high and buy low. As simple as that. Now, for example, when you buy US Euro USD at 1.1, okay, and you sell at 1.1050, okay, that difference in the price is what the profit is. Now, if you go back to the example I made about the maize business, bought at 70,000 naira and sell at 100,000 naira, you bought low and you sell high. Let me use a chart example. Let me go to my chart and explain to you people what it means to buy low and how you make money when you buy low. what it means to sell high and how you make money when you sell high. Now, this is the platform where we use for analysis. Okay, this is a whole lot of data we use for analysis. So all this data has a representation, they have a meaning. All these lines, we call them candles. So all these candles you see. All right, now let us imagine that we have analyzed this data that we have here, and somehow we have a reason to believe that at this point, somewhere within here, if price gets to somewhere within here, it's going to go up. Now, these candles you see represent price movement. Okay, so if these ones that you see going up tells us that price went up at this point, and you can see some going down, tells us that price went down and then went up again. All right, so all these movements you see is what we call price movements. Okay, increase and decrease in price. Now let us imagine that we have analyzed this data and we've done all our analysis, and somehow we have a reason to believe that at this point in time, if price comes to this point, which it has, right? If price gets to this point, sorry, let me use a better. If price comes down to this point, we have a reason based on our analysis to believe that price would go up. So after we've done our analysis, after we've done our analysis, the next thing we need to do is to buy. So anytime your analysis tells you that price will go up, or you're predicting price to go up, you buy. Anytime you're predicting price to come down, you sell. So we buy low and sell high. So you see price came low, we buy. And let us say, for example, we are targeting somewhere around this point. For some reason, we believe that from this point, price would go and increase high to somewhere around this point. Okay, so this tool I just use is a tool that shows with that we are in the market, we are in a buy or sell position in the market. Now what happens, you can see clearly that our prediction worked very well. We predicted that from here price will go up, and it did. So now this movement of price going up is a sign that you're making money. So as price goes up, you are making money because you bought at a lower price here, down here. You bought at a lower price down here. Okay, so let us say whatever you're selling is at 15 naira. Okay, 15 naira, and then sorry, so 15 naira here, and then you sold, or you held it, you waited for it, so it's at 15 naira here. Hope you can see it. So you waited for it, and then price began to increase. From 15 naira it went to 17 naira, 100 naira, 150, 200, 300 naira. Okay, so as it goes up, you are making money. All right, now that is the first way we make money in the financial markets or in forex. The second way is the opposite of this. Now you people will be understanding it with time as we go into the class, but the second way is the opposite of this. So instead of buying, or instead of predicting that the price will go up, somehow you have a reason to say that the price will come down as it is in this point. Okay, so you are saying that from this point in time, based on your analysis, you believe that price, or you're predicting that price is going to go down. And what happens? Price goes down. Okay, so maybe the price is at 100 naira, right? Whatever you're doing is at 100 naira, is at $100, whatever. And then from that $100, it begins to go down, it begins to go down, it begins to go down to maybe $30. Now, usually, if you're dealing with assets, other assets like maybe crypto, if you're dealing with let us say commodities, maybe you bought maize at 100 naira, okay, and it now began to go down, you are losing money. But that is not the case in the forex market. If, for example, you predict that this price is going to go down, you sell at this point, okay? So from 100 naira, it begins to go down to 50 naira, it goes down to 30 naira. Now the difference between 100 and 30 is 70. You have made a profit of 70 because you sold at that time. That's the difference. Okay, you sold at that time. Now anybody buying at this up place would lose money because price is coming down, but you are selling. So as price goes down, you are making money. Now this might not make sense to you, but just hold it, and when we go into practical, you would understand better. All right, now moving forward, the reality, risks and truths about forex market. Now, why many people lose money in the forex market is because, one, they don't have education, no proper education of what the forex market is and how to engage the forex market. And that is why you have me here to teach you everything you need to know to become a profitable forex trader. Now, if you are not part of the Haviri community, you would want to join the Haviri community. Reach out to me, click on the link in the description to join our community. It's completely free for everybody. Okay, so you will get premium education to help you through your journey as a forex trader. The next thing why people lose money in the market is over leveraging. Now, I know as a beginner you don't understand what a leverage is, but then a leverage is just in a layman language, your broker trying to give you more capacity to trade the forex market. Okay, because you as a retail trader, you don't have the volume of money that it takes to engage in the forex market. So what that means is you have $10,000, for example, and $10,000 is not enough to trade in the forex market, because the forex market in a day controls or move $5.1 trillion around. What is $10 compared to that amount of money? So your broker said, no problem, bring your $10,000. In the back end, I will multiply it to $1 million, so that when you are placing a trade, it will look as though you have $1 million, when in the real sense of it you have just $10,000. Okay, so um they have different categories of leveraging, and a lot of traders now tend to abuse this leveraging. So instead of using maybe 1 is to 10, 1 is to 100, that means they multiply whatever you have by 100. They will say, no, give me 1 is to 1000, give me 1 is to 5000, give me 1 is to 10,000, you know. And the higher your leverage, the higher your chances of making and losing money in the market. All right, so you want to keep it at a um you want to keep it at a minimum level. All right, so over leveraging can be a reason why people lose money in the forex market. Now, another reason why people lose money in the forex market is emotional trading. People trade with emotions, so they lose money, they want to go and get it back, you know. They are not disciplined, they allow their emotions to control them. And then another reason is no risk management. They don't know what risk management is, and they don't know how to manage their risks. So they are risking 100%, 50%, 80% of their accounts. So you hear things like, I've blown my account. Now you don't need to worry about this because we'll be teaching you on how to be a good trader. We'll be giving you quality education. We'll be teaching you on how to leverage well. We'll be teaching you on how to master your emotions as it relates to trading. And then we'll be teaching you about risk management, how to manage your risks and not to shoot yourself in the foot, right? And so on and so forth. Now, it is also important to note that Forex is a skill based venture, not a luck based. So we are not looking for luck, it's a skill based. That means just as um, every skill profession, carpentry, fashion designing, engineering, doctor, medicine is a skill. You go to school to learn them, you develop that skill, you become a master in that skill. That is how Forex is. Forex is not gambling, Forex is not based on luck. Is that you have the skill to read, understand, and relate data to predict price movement. Okay, so it's a skill and you must treat it as a skill, you must treat it as a profession because it's a profession, you must treat it as a career because it's a career. Okay, you must also understand that losses are part of your learning process and even your profitability process. Losses is part of the game, is part of the game. You must have losses, but then we now teach you how to balance your losses and your winning so that when you lose and when you win, you would still be in profit regardless. Okay, so if you are afraid of losses, you are not ready to be a trader. Yeah, you are not ready for trading. Losses is part of the game, so that's why we have things like risk management, so that you would manage yourself, so that when you lose, you will not lose yourself in the process. Now, Forex is not a Ponzi scheme. I've said that earlier. Forex is not a get rich quick plan. You want to get rich in the next 6 months, so you're coming to join Forex. I'm sorry for you. You will get poor and poorer. Okay, so it's not a get rich quick scheme, it's a process. And you must have a long term mindset if you want to engage in the forex market. It is not magic money. When you see all those young boys on Instagram flaunting their Lamborghini at your faces and you just want to, be like them in the next 1 year, it is not magic. It is as every profession, it is as every business. Okay, it is not guaranteed income. In fact, a salary job is even more guaranteed than forex. It's not a guaranteed income. Oh, no, no, no. It's a business. Just as you invest in a business, you make sales, you buy goods and make sales, you trust that you have customers. That is how forex is. Okay, so forex rewards discipline, patience, and consistency, not desperation. If you are desperate to make it, then forex is not for you. You must be disciplined, you must be patient, you must be consistent. Okay, now who should learn forex trading? Forex is for people who are willing to learn. You are open to learning, right? You can take control of your emotions. You can control your emotions. You're not being led by your emotions. Forex is for people who think long term. They look into the future and project long term, not 6 months from now. I want to buy a Lambo, you know. Forex is for people who accept responsibility and take responsibility. Okay. Now, one thing I know Forex will do to you is that it would humble you, it would discipline you, and it will make you a better person. Now, Forex is not for impatient people, it's not for people looking for emergency money. It's not for people who hate studying. You must lock in. You must lock in. All right. Um, I would say that the best thing that can happen to you is forex trading if you take it for what it is, and if you settle down to learn the basics, to learn what it is, to learn the metrics and everything involved. Now, in our next lesson, we'll be talking about introduction to trading tools and softwares. So, we'll be talking about TradingView, MT5, Forex Factory, my FS book. These are softwares and platforms that we use to engage the Forex market to do our analysis. So, we'll be introducing you to them in our next lesson. You want to stay put for the next lesson. See you in the next one.